All right, coin traders, a lot of red right now, and we are seeing a lot of supports as well as a trend line broken for Bitcoin. So after topping out, finding our high price for that is at 23,966, so just below the $24,000 level. Big rejection after this false breakout. We thought this big resistance zone was going to be pretty significant, but you can see it has failed to provide support now that we have been flushing back to the downside and broken several other key critical supports, most notably this big trend line that we've been holding as support, and support. So in addition to that, if we actually zoom in and look at some of these price levels, you can see that we were looking at a price level of 22,885, and this was one of our most recent lows before this big run up. So now we are looking down and eyeing the previous low for this move, which is at 22,537. So currently we're finding price is getting stuck up in between this level right now. If this level also breaks, then that's going to be an extremely bad sign, because then in that instance, we will be running down to 22,338. Which is going to be one of the final lows of this move that we can test. But we are already starting to see some of the trends changing on some of the higher time frame scales. So it does seem pretty apparent right now, especially with this move, that we are going to look for this being the current trend high, at least for the time being anyway, ahead of the Fed's decision for raising interest rates. Now we're still in the 4-hour right now, and I got the exponential moving averages turned on, and specifically we're looking at the 50-period EMA, because if we actually zoom out, we haven't had a test or an intersection of this 50-period EMA since back in the start of January, pretty much right when we were looking at starting our move, our big explosive move to the upside. So the fact that now we're seeing a break, and especially with only 3 minutes left in this close, it's seeming more apparent like we're actually going to get a bearish close below this level. So unless the bulls can reclaim it on the next candle here pretty quickly, that is going to be a pretty solid signal that we're going to start to see farther downside slippage. And so then in that instance, I would expect downside support to be coming in at the previous level of resistance before we actually have this most recent consolidation move. So price for that, it's going to be coming in right at about 21,600. But keep in mind too, we do have a pretty substantial level of closing support coming into the downside right around the 22,400 mark. But like we said, one of the big indications and guides was just this exponential moving average on this 4-hour. So likely we are going to experience a little bit more downside pressure. So this support level at 22,400 is going to get a lot of test and hammering on it, which likely is going to ultimately break. If we flip over into the 2-day chart now, you can see that the 12-period EMA is probably going to intersect pretty nicely in terms of a support line, both with this previous level of resistance as well as resistance prior to running up, which is the level that we're targeting to the downside. So for that, 21,200, as you can see, previous resistance, and then also resistance before this explosive candle to the upside. So that would probably intersect pretty nicely with this 12-period EMA. So if we do see a pullback, that's probably going to be the line that we see in between the 12-period and this level of price support at 21,200. Now, if we zoom in and look at the size of these upside wicks, you can see that the price level is about almost 4% of an upside move on this wick. Now, typically when we say 5 to 6%, that's a huge reversal sign. So we're still calling this a reversal signal, but maybe not necessarily ultimate top. Because if we do still pull up technicals, you can see that the 2-day RSI has been extremely overextended for so long since we actually broke above it back in the middle of January. So we've been riding this level for an extremely long time. And as well, indicators like the stochastic RSI down here are starting to roll over bearish as well, and also need to cool down so we can see an oscillation down to below the 25 line on this indicator. So right now, we're not really expecting any sort of new lower lows, especially anytime soon, since this is going to take a long time to ultimately prove. Now, ideally and theoretically, we're going to have this play out over a couple of days or a couple of weeks. So I think we could be looking into the first part of February, for example, to actually get an indication of where we're going to find support. But because we actually found support so long on this initial move before coming into our current trend high, when we talk about finding supports, that's why we always like to establish some time and consolidate on an area, because that does mean support on the way back down. So we are going to be relying on this level being that very nice supportive guide. And so even on this daily chart, we could look at that being a very nice support right along this 50-period EMA, which would be a very nice zone in between the 26 as well. A lot of the rest of the crypto space is breaking bearish out of rising wedges right now, though, so we do know that we are going to likely be seeing a little bit of a pullback over a sustained period of time. And it does seem extremely likely right now that the temporary trend top is going to be in for the time being until we actually roll over and set a higher low. A pullback and a retracement has been something that we've been needing to see here, and we have been talking about it for a while on the channel and over on Twitter, so make sure to drop a follow over on there. @coin_trades is the handle. So this is nothing out of the unordinary move here, and especially with the FOMC meeting here coming up in 2 days, We are still expecting, or most people are anticipating, an interest rate increase and not a pivot. So that is probably going to mean a little bit more downside pressure as well. But nonetheless, hope everyone is staying safe and not panicking, because these are moves that we do need to see in healthy corrections. And this is what leads to longer term upside gains, because we can't just have a complete vertical move without a sell-off here at some point. So definitely normal market moves right now in financial market spaces, and especially just being so overextended on some of these longer time frames. And even looking at the weekly, we do know that we are going to need to see a retracement on this weekly. And so even down to the 26 on this weekly would still intersect pretty much right along the $21,000 level. So still a very good and big target that we're probably going to be looking to pull back to. And so even if we do see a pullback to that level from current prices, that still would represent a pullback of about 7.5%. So nothing crazy, especially after rallying up 46+%. We go ahead and look at a Fibonacci retracement based on the current trend high right now. Retracing back to the 38.2 aligns perfectly with that $21,000 level. So I think that is going to be one of our downside targets here that we do look at. So yeah, let me know your thoughts and your predictions as well, or if you disagree, and all of that stuff down below in the comment sections. Do love getting back to each and every one of you. That is going to wrap it up for now though. So stay safe, take care, and I'll catch you back in the next video.